You can argue, but mathematically it is the most important sector to the overall economy and the markets for good reason, because so much of our productivity is driven on technology. Why is it right now that the outlook may not be as clear as it was, say, from a bounce back perspective, as it was post-financial crisis or even post-COVID?
Dom, it's all about the Fed. Don't fight the Fed. It is almost elementary to mention that, but it's most important when it comes to tech stocks. And the reason is that this group is in a risk-on asset. Is if you have the name tech besides your company profile, that means you are considered a more risky asset. And when you think about the simple discounted cash flow related to this, as interest rates go up, that means you need to get a higher return from those more risky assets. And that has played havoc on these companies. Just to put it into perspective, how much havoc has those rising interest rates had on tech? Is I went back and looked at the 10 high flyers in 2021. This is when interest rates were low. Those stocks on average are down more than 75% year to date. The Nasdaq's down 34% to date. And so if you think about the tech aspect of this, it has been hit more hard. I do want to take the approach that that is bad. What has happened in tech is bad. It's been because of the rising interest rates. But I think that there is this mechanism where the market looks 6, 12 months down the road. And Dom, I don't want to sprinkle good news on top of bad news, but I think it's important that we look forward, is that these rates hikes, or the speed of rate hikes, will likely diminish over the next 6 to 12 months. And I think when that happens, some of these more risky assets will come back into favor. So despite all the negativity related to rates, I'm still optimistic.
I mean, there's precedent for this, Gene. It's happened in the past where you see massive sell-offs for something, for big blue chip names-ish, to the tune of 66 to 75%, and they end up becoming, over the long term and with hindsight, buying opportunities. So where exactly then would the leadership be in that tech complex? Would it be the chip stocks? Would it be those mega cap kind of communication services or software or Apple, for instance? What exactly then does kind of signal that that tech trade would come back?
I think there are two companies to keep an eye on. We'll first start with one that has been less impacted, that many look to Apple as a source of optimism for the market. Ironically, if Apple cracks, people will view that as the bottom. I don't think we're going to get that crack, Dom, and part of the reason is that their business continues to do well. Just to quickly frame that in, we look at the lead times for iPhone in 8 countries. They're still running 3 to 4 weeks. That is higher than what they typically are at this point in the cycle. Usually they're down to 2 weeks. I think separately is that there's just an opportunity around Meta. This company has, they are trying to pioneer what is next in terms of a user platform. And I just want to take 1 minute, is that this trades at 11 times next year's earnings. And the question that has plagued Meta has been part about the impact from TikTok on the core business, but also apprehension related to the metaverse more broadly. It's understandable because this is a new computing platform, but I think embedded in some of that, some of that pessimism around the metaverse more broadly is a question. And if you think the answer to the question of, is there a platform beyond mobile? Is mobile the end of innovation in terms of consumer interaction with tech? If the answer is mobile is the end, then there's no reason to own Meta as a company. But if you believe that there is a future operating system beyond mobile, then Meta is in a great place. And I put that as, when you think about kind of sifting through the bargain bin here related to big, large cap tech that's going to be around for decades, Meta sticks out.